Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the Super Woodie CCI Indicator. Alright, now the Super Woodie CCI Indicator is an advanced indicator that enhances the standard CCI indicator, right? The traditional CCI indicator is enhanced by the Super Woodie CCI indicator. So this Super Woodie is a custom indicator, right? This is how the Super Woodie indicator looks like. As you can see, it is different from the traditional commodity channel index indicator. While the commodity channel index indicator does not use histogram bars to display signals, the Super Woodie CCI makes use of these histogram bars to help you identify the momentum in the market. All right. So when making use of the Super Woodie CCI, what you have to do is watch out for the position of the histogram bars with respect to this indicator window. All right, referencing this zero level. For example, if you have the histogram bars above the zero level, which is going to be in the positive territory, then you have a bullish momentum. Okay. On the other hand, if you have the histogram bars below the zero level, which is going to be in the negative territory, then you have a bearish momentum. All right. So how do you get precise entry and exit points? To get precise entry and exit points, just watch out for the periods where the histogram bars flip to the opposite side. That's where you have your precise entry point. Okay. For example, this was indicating bearish momentum before, right? The histogram bars were in the negative territory, indicating bearish momentum. Then at the point where the bars flipped to the upside, that was where we had an entry signal for a buy trade. So we had our entry signal somewhere around here. Okay. Now, once you have entered your buy trade, you can set your stop loss below the previous swing low. Then for your take profit, you can actually decide to use resistance zones, right? Your exit strategy depends on you. You can use resistance zones. You can use other indicators to confirm your exit, but make sure you always watch out for chart patterns and candlestick patterns. Okay, they are very important. And then make use of trend lines as well. Trend lines can also give you potential reversal points. Then when you want to use the Super Woodie CCI indicator to predict a reversal point or to predict your exit point, wait for the longest histogram bar to form. All right, this is an exit strategy using the Super Woodie CCI. Wait for the longest histogram bar to form. Once the longest histogram bar has formed, perhaps the one that is close to the very top of the indicator window, look for the next histogram bar, confirm that the longest has formed, because the next is going to be shorter than that particular one. Okay, so once the next histogram bar has formed that is shorter than the previous one, you can go ahead and exit your buy trade. So we would have considered exiting somewhere around here, and that coincided with this horizontal resistance and this trend line. Although the trend line, the price broke above the trend line for a bit before falling down. So this would have been a good place to exit our buy trade if you wanted to use the Super Woodie CCI. Now let us look at a sell example. Okay, a sell signal comes when the histogram bars flip from the positive territory into the negative territory. All right, so when you have that bearish flip, it's a sign to enter a sell. Okay, that's your sell signal. So we would have considered entering a sell right about this point. Okay, right about this point, we would have considered entering a sell. Right. So if we had entered a sell trade around here, This would have been a good place to set our stop loss, as you can see, above the nearest swing high. Okay. Then as for our take profit, like I said, in the case of a buy trade, in this case, you can consider using support levels to exit your sell, or you can actually decide to use other indicators to exit your sell, to determine your sell exit points. Or if you want to make use of the Super Woodie CCI, wait for the longest bar to form. All right, the longest bar that will be getting towards the bottommost parts of the indicator window, right? So once you have the longest bar form, ensure that the next bar has formed, which is going to be shorter than the previous bar, which is going to be the longest bar. So as the longest bar forms and the next bar, which is the shorter bar, forms, you can go ahead and exit your sell. So we would have considered exiting our sell around here, and that coincided with this support zone. All right. So basically, that is how to use the Super Woodie CCI indicator. Very straightforward. All right. It's a very straightforward approach. The major things you should be watching out for is where the bars are. Are they in the positive territory or are they in the negative territory? So if we have a continuous trend, for example, this was a continuous sell trend, all right, you will find out that the histogram bars will remain in the negative territory. If it was a continuous bullish trend, the histogram bars will remain in the positive territory. So in that case, let us look at the example of the bearish first. In that case, what you will be using for your signals are the length of the bars. Okay, so once you have entered a sell, your first sell, let's say you have entered the first sell, let's say your first sell was at the point of the sell trend starting, your exit point is going to be when the longest bar is formed, right? And then you exit, and then you wait for the shortest bar to form. Okay, the shortest bar to form, at least the one that will be close to the zero level. Once you have a bar that is somewhat close to the zero level, and then another bar forms longer than that, you can enter another sell. That's going to be a sell continuation. Okay, so you're trying to enter another sell in the direction of the trend. Please do not trade against the trend in this case, right? Do not, it might, you might end up losing. Okay, so I will recommend, if you are trading in the direction of the, if you are trading a trending market, just trade in the direction of the trend. But if you are trading a consolidation market, then that's fine. Just be watching out for the flips from the positive to the negative and back to the positive and all of that. So in this case, we have considered entering a sell after this bar formed, which was longer than the shortest. And then after entering a sell there, the exit strategy remains the same. When the next longest bar form and you have another one shorter than that, you exit your sell. And then you wait for the shortest bar to form again. So in this case, we have considered entering another sell around here, and the longest bar form, another one form, you exit your sell again, and then you wait for the shortest bar to form, and then a longer one, and you enter another sell, and then it goes on like that. So in the case of a bullish trend, it's just a similar scenario, right? So after you have entered your first bullish trade in the direction of the trend, you wait for the longest bar to form. In this case, the longest bar was around this, right? And then you wait another one that's shorter to form, and you exit your buy, and then you wait for the shortest bar to form, and then you enter another buy after another one longer than that shortest one has formed, and you wait for the longest bar to form again, and then you exit. And then we actually had some consolidation around here, and it seems like it was more of a descending, a falling wedge. We actually had a falling wedge around here. No wonder the indicator was displaying short bars. As you can see, the bars were really short, even though this was a bullish trend from the bigger picture. This was a bullish trend from the bigger picture, but we had a flag pattern. As you can see, this is a flag pattern, right? So we actually had a flag pattern around here, but because of the bearish momentum around this point, the bars were short. Okay, they were short because of the bearish momentum. But as you can see, Once that pattern was broken and we had a bullish breakout, we can see that the bars began to elongate. So you watch out for your precise entry points by, entering once the shortest bar has formed and the longer one forms, you enter a buy. When the longest bar forms and the shorter one forms, you exit your buy, and you go on like that. So that is how to use this indicator. I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.